John Williams, New York Fed president, saying in New York City that he is prepared to, quote, act as appropriate. There's that phrase again, to support the growth of the economy, job growth, and inflation coming in at the Fed's goal of 2%. You know, he says the economy's in a favorable place, talking about this dilemma that the Fed has, but he's concerned about risks and uncertainty in the economy. Among those risks, global growth, trade uncertainty, Brexit, Hong Kong, Argentina, debt crisis. He lists all of them. He says the economy's momentum, by the way, is already somewhat less robust than we thought because of the downgrade to GDP and to the downgrade of the level of employment by 500,000. Low inflation, he says, repeating something he said before, is the problem of this era. The number one goal is to keep the expansion on track, but he says they must maintain a data-dependent approach. Carl, we've had this before. Everybody agrees the economic data, not too bad. However, all the risks out there, and where these Fed guys differ is in what they want to do about it. Bullard yesterday talked about cutting 50. Rosengren yesterday from Boston talked about holding the line. Williams, kind of in the middle, but seems maybe more inclined to also cut. And just so you know, for your information there, we've got a 100% chance of a September cut, but a 14% chance by one measure and a 7% chance by another of a 50 basis point cut. So that still seems to be a very minority stance that is out there in the market, Carl.
Steve, it's not just Rosengren, Bullard, it's not just Williams now, but this Dudley op-ed doubling down on his entreaty to the Fed to not enable the president's trade tariffs.
Yeah, that's out there too, and I think the Fed is, I guess cringing is probably a pretty good word. They don't really want to be in this political fight. You know, it's funny, Carl, is that if the Fed wanted to say something politically, they might have said it. Instead, what they did is come out with a very strong statement kind of disavowing Dudley when it first happened. So it's pretty interesting that that's going on. You do not hear the Fed guys saying that except to say, look, this is a very bad card that we've been dealt that we're going to deal with the question being to deal with it preemptively. In other words, count on the trade war to go on and to cut preemptively for the potential of impact on the economy, or do they wait until those impacts show up? We haven't heard a whole lot about how yesterday's ISM manufacturing decline is affecting their thinking, but I think it has to be working in there. The idea that you have the first decline in 3 years and that the export numbers really fell through the floor. I don't know if you saw those, because I guess we talked about them yesterday. The lowest the export index in the ISM since the financial crisis, which is a number and a record you do not want to aspire to.